We are going to have a look at some of the numbers that are making headlines today, and we will start with the currency, whereby we saw the Kenyan shilling holding steady against the dollar on Thursday to close at 84.45.55, which was barely changed from Wednesday's close of 84.35.55. Crossing over to the Nairobi Securities Exchange, we saw the main share index retracting half a percentage point to 4,956.95 points, to close, dragged down by two of the most capitalized stocks, and this is Safaricom and East African Breweries. And crossing over to the all-share index, it fell nearly 1% point to 127.77 points. With us in studio is Ian Gachichio, a research analyst with Kestrel Capital. Many thanks for joining us.
Thanks, Beatrice.
Now, looking at some of the numbers that came out from the economic survey yesterday, that the government is now projecting a 6% growth this year, economic growth. And of course, if you compare it to last year, which was 4.6%, and they're looking at the rebound in the manufacturing sector, they're looking at rebound in the financial sector. Is 6% feasible for you?
Yes, we do believe at least growth will be above 5%, so 6% does seem within reach. This is, again, it echoes the macroeconomic stability we are seeing this year. Inflation has come down. We are seeing, I mean, the figures have come in and they're pretty impressive. Also, the investor confidence from the peaceful conclusion of the elections. So we could see that growth feasible, as well as improved rainfall. So agriculture should benefit from that.
There's a lot of optimism also coming in because of the reduction of the central bank rate by about 100 basis points, which is expected to spur economic growth. Yes. Is that something else that is also going to filter into the economy soon?
Certainly that obviously it will help with credit growth. Of course, businesses will need that credit and will take up more loans and increase borrowing to spur on economic activity. We could also see an increase in jobs. We saw 600,000 jobs created last year. We could, the government has a target of 1 million. We could see increased jobs due to that lower cost of credit to enable the economic growth this year, coupled with the other factors of improved rainfall, agricultural output, and lower inflation.
Agriculture is one of the key fundamentals that drives the economy, contributing about 25%. And of course, this is dependent on the vulgarities of the weather. Now we're looking at Sasini, which is going to be announcing their half-year results later today, which is one of the agricultural stocks that trades in tea and coffee. Yes. What is your expectation on their half-year performance that you're going to have later in the day? Okay,
their performance may be subdued due to a carryover effect from their performance ended September last year. They had some issues, and I think they registered a significant drop in earnings. That was, of course, due to lower tea production last year. There was a frost early in the year. There was frost that attacked tea, and as well as lower rainfall. The rainfall was actually a bit delayed last year, but this year we have seen improved hydrology. We've seen tea production hit 10-year highs, and although the prices have still remained constrained due to the increased supply, we do expect, because of that improved tea production in the first quarter of this year, Sasini could register some gains, some improvement from that. So we do expect at least some improvement in their earnings.
Previously, we've had Sasini saying that they might want to get into the real estate sector, which is one of the asset classes that has been gaining a lot of high interest rates in comparison to other asset classes. Is that a good move in your opinion, and especially, trying to diversify from the agricultural earnings and leveraging on real estate?
Yes, it does seem like a logical step in improving their returns and also capitalizing on their assets, in actually getting a better return on their assets. So it could actually result in probably better earnings from what they're getting, because they probably have assets in land and things like that. So and we've seen other companies do this as well. And Sasini already has some properties. There's Sasini House in town, and we could see, it seems like a wise step in their part.
Okay, crossing over to the manufacturing sector, which is one of the key sectors that has been highlighted in the economic survey as one of the key drivers expected to boost economic growth this year. We're looking at Mumia Sugar, which is one of the counters that was heavily one of the top movers in that sector in yesterday's trade, and it has had some lackluster growth this year in terms of its share performance. What are your sentiments on how it's likely to perform?
Mumia's, of course, investor confidence is low on the counter, first of all, and given the expiry of the trade agreement, impending experiment, we can see which will result in cheaper sugar imports. We could see Mumias, and as well as efficiency issues with the company, we could see their performance remain subdued, and that generally the market seems to have already priced in this future performance in Mumias. So we don't expect much in an increase in improved performance on Mumias.
And the trade agreement you're talking about is the COMESA trade agreement, which they have been postponing for a couple of years now.
Yes.
And now it has come to an end. Looking at it from a perspective of imports, cheap imports of sugar that we're likely to have, and the fact that some of the stocks, you know, when you're looking at cane production has been on the lower side because of also weather. How then do you see this boding for the company?
I mean, it's a very hard to say, of course, exactly what will happen, but it's generally there's a sentiment that will be negative for the company because, again, sugar prices, if they're undercut, people are going to buy the cheaper sugar. So it's generally a low sentiment on that. Yeah.
Does it help that inflation is coming down? So probably consumer goods also expected to also come down and people will have some money to spend on some more goods.
Exactly, yes. That definitely, people will obviously, with more disposable income, perhaps they may be more stringent on how they spend it, and they'll, of course, prefer to maintain that disposable income. So cheaper goods, food, people will be looking at lower prices on those. All
right. Looking at East African Brewery, which is one of the stocks that dragged down the main share index yesterday, we've been seeing a lot of interest from foreign buyers. And yesterday they were actually selling, dragging it down by about 3%. Why are we seeing this fluctuation?
Actually, yesterday there was actually very low foreign investor participation. Generally, global markets, there was uncertainty over the Federal Reserve of the US actually speculated or hinted on a reduction of the stimulus fuel that they've been giving the economy, and that has driven global markets to highs in the first quarter of this year. So there was a lot of investor uncertainty in global markets, and that seemed to have affected foreign participation at the NSE. So there was actually no foreign buying on EABL, and that's what drove the counter down. And it will be interesting to see how investors react to that now.